of Bitcoin. A lot of the price action lately has had signs when you look at the right data. And today we're going to go over those. Welcome, Z.
Hello, Sina. How you doing?
Very good. Very good. Thank you. Excited. Just a couple, 1 or 2 hours ago, we were launching our service, our custody service. So we just did another long live event before this, but this is another exciting discussion.
Well, congratulations, guys. It's actually really exciting to see you folks are working on something meaningful, and I'm pretty sure the Bitcoin community will appreciate it. And actually, the timing is really interesting. Mike and Sailor talking about self custody not being like probably the best option. I didn't actually listen to the interview, but I saw the reaction. The timing is perfect. Yeah,
Yeah,
Viva
exactly.
self custody actually.
Absolutely. And I think what we have is a lot of people have concerns with self custody, and that's very legitimate because if you have your whole family's money in your own hand, that's a little bit risky. So I think what we're trying to solve here is remove that risk of making errors through layers of backup, which has not been possible so far, and we've introduced a new technology that allows it. We hope that this one actually helps motivate more people to do self custody. But that's not the topic for today. Today we want to look at Bitcoin data. Let's take a quick look at our Bitcoin's price action. This chart is showing the recent price action from October. You see, first of all, it has been a fantastic year for Bitcoin, returning 95%, almost doubled. Congratulations to everyone who has been hodling since the beginning of the year and before. In the last month, 5%, but the last week and the last 24 hours have been downward action, about 3%, quite a bit of rapid drop. And this really shows that the price tried to break the channel that it's been since the end of quarter one. And it reached one local top, another local top, and it couldn't sort of breach that. And then we are back down to the channel. Today, we want to analyze through the lens of on-chain data what's going on and where we are. But before moving on to Z's detailed analysis, I also want to give you the big picture through the lens of a model that I have developed that gives us a general view of where we are in terms of valuation. Here's a Bitcoin quantile model that I've introduced last week. And basically what it does is it models the distribution of prices at any point in time and then identifies different quantiles. And in this chart, for simplicity, I've broken down the probability space into 3 bands, from 1 percentile to 33rd to 66 and to 99. And I've extrapolated these lines, the regression lines, to 2026, end of next year. And these are the numbers that are implied. Okay, so essentially, if you look closer, we will see that Bitcoin, you can think of 3 bands for Bitcoin valuation. There's blue, green, red. Blue means we are in depth of the bear market, right? And you can see it coincides well with the depth of the crash after 2021 bull run. And we spent quite a bit of time there. And actually, according to the distribution, we spent 1/3 of time in this range. But then after quite a bit of consolidation, Bitcoin breaks out of that range typically, and then enters the green band, which is warm. It's not hot, it's just warm, and the market is warming up and building another base for the final explosion into the hot zone, which gives us the most of the excitement. But it's actually not the best time to learn about Bitcoin. Best positioning and best accumulation happens in the blue zone and then the green zone. We are sort of in the lower part of green zone right now. So if you're thinking about valuation, this is probably something like 45th percentile or sometime around there. Significant upside available, possible, but uh, generally speaking, yeah, less. We are even less than lower than the median. And if you want to look again closer on the linear chart, because previously was logarithmic, this is how far we are from the bottom versus the top of this quantile line. Okay, so with that, I mean, this seems like we're still in a wonderful place. I'd love for price to actually go even lower. It just gives me more opportunity to accumulate. And but sort of like the honeymoon, which was in the blue region, is over. And after the advent of the ETFs, we are sort of warming up in the warm up period. And who knows when we will experience that explosion into the red zone. So, Z, tell us more about what you see in the on-chain data and what can we learn from that data set.
Sure. Let me share my screen. First of all, I really like the model you just showed. In general, the model's trying to see the probability, or better to say, quantile. From that lens, when you look at a fair value and see how deviated and what direction the deviation is, I really like that kind of framework because it is agnostic about what is next. You don't know you're gonna go to the red zone or not, but you can tell in comparison to your fair value, you are in a cheap or lower undervalued zone, or you're not actually in the overvalued zone. It is really a really interesting way to look at the any model that you chose as a fair value, and I really recommend everyone to look at it that way. And hopefully we get back to cheaper zone, like you said, because the people who do the DCA, they want cheaper corn. And getting back to what we're trying to do today, I want to just say what we're trying to say. Today we're going to look at a couple of charts and show you how the recent rally to close to 69, I believe. I don't know what was the closing price in that specific day. It was close to, let me see, it was around like 68, 69,000. How we could use on-chain data, not to say, okay, this is top with 100% certainty, but we could see a couple of metrics that are really popular for on-chain analysts are heating up. So we're going to go over those metrics and see how heated they were, and potentially look at the same metrics and see where would be the potential local bottom and bounce back price level. So that's the overall framework. To start with, I have to just resurface another chart that we talked about in our sessions. I think it was 2 weeks ago. And to just recap, what is the chart showing? The red color, the red trace line, is showing how the share of the Bitcoin owned by the short-term holder, and the blue one is showing the share of supply owned by the long-term holder. This short-term, long-term terms are used a lot by on-chain analysts, but I think the closest term that we can use and is probably familiar, is easy to understand for most of our audience. Short-term means the new investors, the people who actually enter the recent over the recent 6 months, and they're more price sensitive. They are usually representing the demand side, and the blue or long-term holder are the long-term holder investor or long-term investors who are usually on the supply side. I mean, they're determining they're selling the Bitcoin at the price that is right for them. So whenever you see the long-term holder supply growing and the short-term holder actually decreasing the share from supply, that means the hodling sentiment is dominant in the market. And the other way, when you see the short-term holder supply is increasing and the long-term holder is decreasing, that means the spending sentiment is actually dominant in the market. As you can see, after July this year, you could see there was some sort of weakness in market. The price action was showing some weakness, and then the long-term holder supply started to increase. That was like because they were decided to not spend at prices below 65, or actually we saw 48 or 54,000 at those levels. They decided to huddle. So huddling was dominant, and short-term holder supply was decreasing because the new investors were not keen to buy or enter the market. So the demand side was cooling down, and markets showed some huddling sentiment. But after, I mean, it was late this September and early October, you could see the price trend was showing higher high, and the demand was coming back. that was exactly where the long-term holder decided to spend. You could see their supply is dropping. At its max, it was around like 14 million, and last week it was around 14 points. Yeah, 14.2, 14.2 million, and now is around 14 million. So around 200,000 Bitcoin was spent or changed hand from the long-term holder to the short-term holder or the new investor. You could see they were buying. The new demand was coming into the market and absorbing that supply that was deployed by the long-term holder. So by looking at these two lines, we could say with a high certainty that since mid-September, market was showing some promising midterm to long-term momentum, and that was the opportunity that the long-term holder seized and start to spend. So that rally, starting the mid-September, was a rally that was supported by a new demand introduced to the market. So that's already established by this chart. When we look at the short-term holder supply, the one that be the blue one that we just talked about, which is almost around 2.7 million Bitcoin that have been moved in the last 6 months, we can actually probe into this short-term holder supply and say and look at it and say where it is heated. What do we mean it's heated, or it is actually in high risk zone? When we have a couple of million, 2.7, 2.5 million coin owned by the recent buyers, we can look at every single Bitcoin and see if whether it's in profit or whether it's in loss. So in a binary framework, we look at every single coin owned by the new investor and see, okay, how many of those coins are in profit. When the majority of these coins that was purchased or moved or acquired by this new investor are in profit, the chance that they start to spend is pure psychology. The chance that they start to spend is getting higher and higher, and risk increases as much as in a parallel way. So if the risk, if the number of coins in profit that are owned by new investors just grow and increase, the same time the risk in the market increases as well. Do you understand what I'm saying, Sina?
Yeah, absolutely. So
Yeah,
what's the range of that metric?
that is really a good question, because cycle to cycle the range changes. Like, depends how deep is the market, what is the depth of market. But starting 2021, when the market is seeing around 2.3 million coins owned by the new investors, and that 2.3, I'm saying 2.3 in profit, market start to show some weakness because most of them start to spend. So given that range, which is pretty established because it's almost 3 years, as soon as market sees plus 2.1, 2.2 million coins owned by these new investors and all of them in profit, you could expect a weakness in the market. And zooming on the recent bull market, I mean, starting 2023, January 2023, we saw that moment, that structure showed 1, 2, 3, like a dozen of time. You could see when the market experienced 2.3 or 2.4 million coins in profit owned by the new investors, we saw some weakness. And that was actually the structure that we saw in last week when market was getting close to 68, 69,000. Above 2.4 million coins owned by the new investors was in profit. And by looking at the history, recent history, one could have a very high expectation for a market correction because the chance of spending by these investors ramped up like a lot. So looking at this chart, that was the first sign of potential local top in the market. And then right now, after looking at this, you should ask a question. Okay, does that mean whenever they go on, because we're talking about probability, we're talking about psychology, they are in profit, but we cannot guarantee they're spending. Yes, so far we can look at the last 2 years or even before, when they have plus 2 million coins, they are spending, but did they actually do ramp up this their spending? We can answer that question. That's the beauty of on-chain. So
So
after
so
the yeah,
so far we know that 2 million coins are in profit, and what we see from the data is that too many people having sitting on a lot of profits, but that doesn't mean they're going to sell. We can look at another chart that tells us when exactly the sale begins.
exactly. And I have to emphasize that plus 2 million coin in profit is specifically in the pocket of the new investors. And we talked about the importance of new investors because they are the one that are forming the local tops and bottom. The long-term investors are important when we talk about the cyclical tops and bottom, but short-term holder are more important in between of the cycle tops and bottom. So yeah, 2.4 in profit, but are they spending? The metric that we look at, and there are tons of other metrics, but this is my favorite one because it's really interesting. And we talked about it before, SOPR, spend output price ratio, profit ratio. But if I want to explain it and make it easier, it is looking at the price today, the ratio between price today to the cost basis of the short-term investor who are spending. Just I repeat myself, not all short-term investors. The short-term investors that are deciding to spend today, we look at the ratio between price to their cost basis. So when that ratio is above 1, that means like, okay, the majority of the one that are spending a profit. When it's below 1, that means these investors are spending on aggregate in the loss. As you can see, because we were talking about the recent history, all statistical tool try to use some sort of rolling window.
So let
Since we're
me let
talking,
me
yeah,
repeat that if someone doesn't, if that's complicated. This is
sure,
essentially, you can think of it as how much profit or loss is realized,
yeah,
right? Previous chart was saying how much unrealized.
yeah,
Uh, yeah, so unrealized profits. This one, SOPR measures uh, how much money was realized, how much profit. Now, if it's above, now correct me if I'm wrong. If it's more than one, that means people are realizing positive profits. If it's
yeah,
less than one, that means they are selling at a loss, right?
exactly. And as you can see, if we look at this range, I mean, starting early, let's say March, after we saw the market top, and you can see in the bull market, the euphoria, when we have a strong bull market, this metric gets away, like deviated from 1 to the positive side, to the, numbers above 1 drastically. You could see it's ramp up. But after establishing a local top, or, a major top, a top blow off, then this metric is, ranges in a specific a statistical range. You can see there is a range that established since March this year, and every time we reach to like this top of this range, you could see the market is correcting itself. And when you look at the confluence of this chart and this chart together, this is a perfect toolbox for people who are trying to anticipate or speculate about the local tops. It cannot show you every top, but it is pretty good, damn good when you look at, in a midterm way. Like let's say someone is trading in a monthly or weekly time frame. So those people are actually benefiting from these two metrics. And the recent top was not an exception. As you can see, when we got to that 68 late October, you could see, 20th of October, that 69,000 put 2.4 million coins of Disney investor in profit. And at the same time, you could see their profit taking was ramping up. And now we are seeing a weakness because they exhausted the buy side by just selling too much. The demand side got exhausted. You could see there was a sell-off. So these two metrics was strong, and it could give you a really nice hint about, okay, there's a potential for correction in the market.
Okay,
Yeah.
perfect. So so I want to have the audience take a look at this. Is a fantastic chart. Yeah. So first of all, notice how well all these local bottoms are matching the sell at a loss for short term. So for the market to bottom, you want short term investors to start selling at a loss, right? So
Yep.
then second, many times you see prices going down. I can't pinpoint the exact date here. Yeah, but for example, before the look at the top of the SOPR, but right before that, we had another small local top. Uh, right before that top, right
Like
before
this
before
one?
the, yes,
Okay.
exactly. So price went down, but super doesn't show that people are acting too crazy. So the price continues to go up, and super shows you that people are now selling at a profit by a huge amount. I don't know if we can establish like long-term ranges, but just comparing to the recent history, at this point, you could have seen that people are exiting with positive profits. Short-term people are exiting with positive profits at a high rate. Can you guys show us the 5-year?
Yes, that's the beauty of this chart. When you look at, because it is a matter of like research. What window you have to look at and establish those range. As you beautifully pointed out, in bull market, the euphoria phase, you go out of that range like crazy. Like it ramps up, it break above that higher band. But if you put that aside, during the other phases of the bull market, you could see it is a range around one, and these local tops and bottom can be established by realizing loss and profit on aggregate in the by the new investors, and that's really nice metrics to just locate those tops and
And
bottoms.
if you only just, this chart is also amazing. This very clearly shows that most of the time people, I think, looks like there's a bias towards positive. So most of the time people are exiting with positive profits. But whenever we go to negative, that's a much more significant sign, I think, because that tells people are so scared that they're selling at a loss.
Yeah,
And this typically coincides very well with the bottoms.
yeah.
So I think from this chart, what I learned is whenever short-term holders are selling at a loss, I'd love to be in the market.
Exactly. And if you look at the bear markets, this metric is biased towards negative or below one. If we say negative is wrong, I mean it's below one, because the bear market, people, the new investor are in loss, and they start to spend when the MVR, the SOPR is close to one. They start to spend at local tops. You can see, because it is from the other way. They start to spend when they see the prices close to their cost basis. So the bias in this metric tells you, are we in bull market or are we in the bear market? After establishing the bias, we can use this metric to locate the local tops and bottom. In bull market, the local tops are when we are deviated from one, and local bottoms is when we're really close to so far close to one. You can see slightly negative is a good structure definition. I mean, a structural definition of local top bottoms. And like I said, it's really interesting to study this metric in bull and bear market. So far with these two metrics, we use on-chain data, and everyone can confirm, especially the people who are using both on-chain data and perpetual, the amount of insight that you can get from the on-chain data would be triple when you look at the confluence between on-chain data and perpetuals, because it's pure psychology. To do so, and we are taking the recent rally as a showcase, as an example, but you can use this structure for future local tops and bottoms. If you look at the recent top, which showed, by using on-chain data, we could show that there was a high potential for a correction. But after looking at the perpetual, we can actually reinforce our speculation by seeing if there is a confluence or not. Let's look at the best, I would say one of the best metrics in perpetual, which is funding rate, or is the cost of staying long in the market. That's
So,
the
let me
definition.
clarify that one. So far, we've been looking at on-chain activity.
Yeah.
Another thing we can look at, but that doesn't really capture what's happening in the paper Bitcoin world, which is a futures market.
Yeah.
So that's kind of an additional, that's a secondary layer on top of the base layer that trading happens. So by looking at both of them, we get the full picture.
Exactly. So in the perpetual market, perpetual futures market, if you look at the funding rate, you could see the appetite of the long side to pay the funding rate or the cost of being long in the market. So if the funding rate going up, that is a sign that the demand is back in the future market, and of course in other sectors as well, but we are specifically focusing on futures market. And the other point that we made in our first session, I believe, funding rate should be, if you want to look at the neutral value, or the value that above of it is bullish or too much demand, and then below it is bear market, it is 0.1. And why it's not 0? It is because the Binance, which is one of the top futures market, in terms of volume, in terms of OI, they cap and fix the funding rate at 0.1%. So that's the neutral level. There is lots of details why they do not zero, because they want to incentivize people to be long in the market. But let's say the 0.1%, which is this line, look at it as a base level, and above that means demand is back. Below it, it means there is not much demand in the market. You could see after July or early August, the black line. I don't know if you can see the tiny black line, which is the aggregate. Let me turn off all changes and just look at the aggregate, which is the mean value. What is the binary? You could see this was ramping up back to the neutral value, because since March, and if we exclude the May, most of the time we were below the neutral value, which means the market didn't see that much demand that you usually see in bull market in perpetual. But starting early August or late July, you could see the moving average. This is 7-day or almost 5-day moving average, ramping up. So you could see since early July, the demand in futures market was coming back. But among all these exchanges, I recommended everyone look at Binance, Bybit, and OKX, because their OI is really huge, and they are the one determining the direction or sentiment in the market. Those investors are actually really impactful in the market. You could see when we look at the recent top, let me see, and turn off the moving average. These are all, yeah. Let's look at most of the hobby, because I want to turn off FTX. The FTX is not active anymore. So if you look at the recent top and focus on an hourly basis, you could see the recent top, most of them, probably just BitMEX. If you turn on BitMEX, most of them were overshooting the 0.1%, actually double the funding rate, the neutral funding rate. You could see most of the exchanges, the funding rate was jumping drastically above the 0.5%. So in perpetual market, we had that demand or shock on the demand side. We could use that as a hint. Okay, it's overheating too fast.
Yeah. And then, so what happens is basically when you see funding rate going high, that means traders are willing to pay more and more for long positions. And that's when funding rate is positive, right? When a lot of people take long position and there aren't a lot of people taking the other side, funding rate goes up. So that tells you if funding rate is really high, that tells you in the market there are so many longs, and it is very likely that over time longs are exhausted. So there is just so many people that will take long positions. When funding rate reaches very high level, the last few people that are willing to pay large amount of interest to go long are also enter the market. Then the market exhausts, and that's when your risk of reversal increases.
Exactly, you put it perfectly clear for audiences. So using the confluence between the increase in funding rate, like just I showed, and the short-term holders spending or unrealized profit and loss, you can use these three metrics to speculate about the local tops and bottom very beautifully. Like all you have to do is understand these metrics, and it is giving you a 3D view rather than using just one metric, because which is really dangerous. Using these three, you are looking at if the local tops are being forming by new investor being in profit, most of them, or they are reacting to that profitability. If they're reacting to that profitability, do you see that is structure in the perpetual market as well or not? So when three of them are showing you a high risk structure in the market, you could react by either hedging, or you could react. It's up to you. It's up to your strategy. But if you, most of the strategies are based on measuring the risk or sentiment in the market. That will be a great input to your model. Is it a mental model or is it a systematic model? You can use these three metrics and look at the confluence and locate local tops and bottom. Very, very nice. And it's matter of like studies to do the rolling window. If you want to do a statistical analysis and use the transformation function, it will be up to you. But the concept is there. These confluences are really, really powerful for whoever is interested in speculation or observing the market in general.
So you want to see if there's a lot of coins from short-term holders in profit. Then you want to see through SOPR, you want to see if the short-term holders begin realizing profits, by which is when SOPR is more than one.
Yep.
Third, you want to see this confirmed by increase in the funding rate in the perpetual futures market. If all three signals align, then that's a very powerful sign of reversal.
Precisely. Yep.
Very good. This is amazing.
Yeah.
This makes perfect sense.
Yeah. Yeah. I would say it would be great in future, because I know that you talked about this to your audiences, and we put out a piece out I think a couple of months ago. We are trying to establish these frameworks, and hopefully in future through 21st Capital we start to develop indicators to help people to measure the risk in the market, and then use this indicator as an input to their model. Why not?
Awesome. I
Yeah.
love it. I love it. I think what we can do in future is, like, as you said, like create models that take all the three signals, combines them, and generates one risk metric, similar to what we did before for just the perpetual market. But here we can also add the on-chain parameters to it to have a mother of all overheat or underheating indicator. Pretty good.
Wonderful. Yeah.
I love it.
Nice one.
Awesome. So this is amazing. I think this was very clear, very actionable, and explained very well. So thank you very much. We also had other topics prepared, but I think it's not a bad idea to just wrap this one in a nice package of analysis. The three indicators you want to look at for identifying local tops. And then next one, something that we might actually do next week is what was it, the analyzing the correlation between ETFs and futures market. Is that right?
Yeah. uh, a lot of talks are around ETFs and how they're affecting the market, and we already covered a good bunch of information about what is the share of the capital inflow introduced to the market by ETFs. But specifically, you heard about this term cash and carry. So next week, hopefully, we get to look at what is cash and carry and how it is affecting the market price action, and also show you, I mean, evidently show you how impactful these cash and carry trades are in forming the local tops and bottoms. So we are following up on the same topic, local tops and bottom, and we are resurfacing the metrics that are showing the influence of the ETFs, and also introduce and explain the cash and carry, which is really, really powerful strategy in the current market. And hopefully we will do it in a short amount of time, and people can enjoy the details and metrics and a lot of charts, which is my favorite things. Charts.
Yeah, awesome. So a lot of people show you the ETF flows, but Z will show you the other side of it, because many of people who are taking positions in the ETFs, this is only a part of their strategy. The other part of it is maybe shorting Bitcoin in the futures market, right? So if that's the case, maybe that the flow doesn't look as impressive because it's part of a hedging strategy. But the reverse of it is also possible. And again, sometimes you might see ETF selling, but as long as you if you're not aware of what's happening in the futures market, you might think we're going down, but it might only be someone taking a big long position in the futures and a short and selling the ETFs. So you can't see the other side of the picture if you don't have access to that part of the data. So this is what we'll discuss next. Thanks a lot, Z. This was amazing. I think this was one of the best and most concise introduction to this trio that you have. One of the simplest and most actionable collections of the price action indicators. And it's also amazing to me that this is not priced in. I would bet that like 99% of people are unaware that there is so much richness in the on-chain and futures market data. but we are a ways from these things becoming mainstream. So there is alpha here, and you can leverage it. So data gives you power, and what we're trying to do is showing you how professionals like Z understand the data and distill 200 300 different charts that you might see into like a handful of 2 3 charts that give you a very good picture in a short amount of time.
Nice one. I really want to say congratulations on the new platform you launched. I'm really, really interested to see what you guys are trying to do, and I'm pretty sure that very, very bright future ahead of 21st Capital.
Thank you. I appreciate it, Z. Let's see how we perform. Hopefully, we will have a lot of people interested. We are here to educate people on how to do better self custody as well. What we're doing with you is one side of our analysis, one side of our work, which is Bitcoin analytics. It teaches to teach Bitcoiners where we are in the market and how are the market dynamics evolving. But another almost half of my time is spent on developing these custody solutions in a way that's useful for people, and hopefully will onboard many people on a better custody method. Thanks a lot for those who were with us. Appreciate your comments. Love all the energy. And yes, if you missed anything, you were watching on Twitter, for example, the same link will retain it. Once the live is done, just refresh. You can watch from the beginning. So with that, I thanks everyone, and thanks a lot, Z. And again, guys, we are trying to do this every week at the same time. So 4 p.m. Eastern on Fridays. But there might be some change here and there, but that's the general plan. So if you're interested, you can tune in as well. But this is also going to be on our YouTube channel, also on Z's YouTube channel and Twitter.
Nice one. And I hope a really, really nice rally, or for whoever wants to DCA, achieve Bitcoin. So let's see what happens.
Both are good. Both are
Yeah,
up
both
is
are.
nice, down is nice.
Of course.
All right.
Thank you, Sina.
See you next week, mate.
Bye.